Good afternoon, Bob Georgiou, Remax Accord, coming to you from beautiful Danville, California. This week we are going to talk about a couple other issues pertaining to the buyer's litigation settlement out of Kansas City, talk a little bit about insurance and housing costs, and look around the Concord market. Appreciate you checking me out. Roll the intro. So last couple of videos we talked about the buyer's agency settlement and all the changes to the market that are happening currently, and things are beginning to shake out, level out across the country. One of the things I didn't mention is a mandate out of the agent settlement was that all buyers who came through open houses had to have a buyer's agency agreement with an agent before they could go out and take a look at property. And most of its agents realized that this was not a good plan, didn't allow the buyers to shop around the way they historically have or normally do for anything. Actually, if you go and shop cars, you kick tires, take a look around, you talk to people, get a bunch of information about what you're buying, and then you make your purchase. You make some decisions. You decide where you're going to buy the car, you decide, or buy the house, decide who you're going to work with, and which model you're going to end up buying. Well, with the buyer's agent settlement, you had to have an agreement with an agent, and certainly that was disruptive to the process. Well, immediately CAR scrambled, ran to Sacramento, and had the law changed immediately. The news is reporting this, and right here for you we have the Inman story. Is they're reporting the highlight of this being that agents 90 days, we're limited to 90 days on any buyer's agency agreement that is signed with the potential buyer, but that's not really the big impact. It eliminated the mandate that a buyer commit to an agent before going out and shopping for real estate. Buyers can now do their traditional shopping, go to the open houses, talk to agents, look around, without making a commitment to a buyer to go and take a look at the property. When the buyers are ready to make offers, they will need to commit to an agent and have a buyer's agency signed with a commission arrangement set up. And this is more natural way of, more in line with the way real estate transaction or the major asset purchases typically happen with consumers. The other thing you're starting to see is at closings, the buyer's agent's commission is being clearly delineated on the closing statements. As I mentioned, kind of in very broad terms, is that the buyer's commission is still a function of the listing agreement, and consequently, I didn't say this directly. I sort of mumbled around it because I was certainly concerned about the actual language I would use to put it, because it may or not be 100% true. But that thought was not only in my mind, but it was in the mind of a lot of agents, and that the commission was still going to be placed, the buyer's agent commission was still going to be placed on the seller's agent settlement statement. Well, and sure enough, that's what the title companies were doing. What we agents now are doing is we are very clearly directing the title companies to put the agent's commission where it is exactly placed. So if the sellers offer a concession to the buyer's agent for their agent's commission, the concession will appear on the seller's statement, and the buyer's agent's commission will appear on the buyer's settlement statement. So the costs are applied exactly where they need to be in order for there to be a very clear line that the buyer is paying their own commission from here forward in conjunction with the Kansas City settlement. Let's talk about insurance. It turns out there's a macro trend all around the state of California with the a buyer's ability to get insurance on properties. It seems that 15% of the transactions are beginning to fall out of contract because buyers are unable to find insurance for the properties they're purchasing. It's national news that many of the insurers are leaving the state. It's a problem. Sacramento's trying to deal with it in the Sacramento way. As of right now, there is no clear resolution to this issue, but since lenders require insurance to close transactions unless your house is in a fairly safe area, not an earthquake zone, not a fire hazard zone, make sure that you have an insurer that will insure the property, because the current insurer may not renew the policy if it is in a hazard zone. In every transaction, we provide buyers with a zone disclosure. It does have some information about the ability. More so, it has disclaimers that you need to call around, make a lot of make sure that you can get insurance somewhere. It's requiring a lot of footwork on behalf of buyers and agents these days in certain segments of the state, and it is beginning to affect the numbers. Rest assured that this is something that's going to have to be fixed to sell property in about a third of California, Northern California, in the mountainous areas and the wooded areas along the coastline, that especially in Southern California, where they have a fire season per se. And this is, I could do a whole video on this with regards to all the, this is a consequence of a complex system. It's not just the insurance problem. That's just the symptom of a greater problem, and that California bureaucracy has been running woodlands and construction and regulating what owners can and can't do to protect their properties for a long time. These chickens are coming home to roost, and it's going to require something more than just insurance regulations to change the problem in the long term. Insurance regulation in the short term is going to be a problem. I'm sure the state's going to get involved in some way, shape, or form in the short term in order to cover those transactions so that people can transact in real estate. But in the long term, it's going to be a greater, more structural problem that needs to be corrected. And I know a little bit on the edge that the state is doing some things, just not doing enough of it. Maybe this is another video that I can do before the end of the year, going into the slow season. So if you have any questions about that, leave me a comment, send me an email. My information is down below. Happy to help. So we are now in the third quarter, typically the quarter where the market moves about 3% in favor of the buyers, like clockwork every year, with the possible exception of markets where there's no actual inventory. Buyers will begin to start taking their vacations in about 2 or 3 weeks, maybe a month. I guess we're 21st now, I guess is what day I'm making this video. So we're a month out from buyers taking their vacation, another 30 days of good market, and we can look forward to, so far it's beginning to look like 2025 is going to be a fairly decent market. Fairly hard to predict where the market's going to end up, the 3, 4, 5, 6 months from now, but there are indicators that would show that there's signs of trouble, like big wave of inventory, economic forecasts. Right now, the early 2025 forecasts are coming in, and it's looking like the experts are predicting another 10% in real estate, which seems insane, where our property values are currently, and they haven't really moved all that much in the last couple years post-COVID. A lot of changes in the market since then, increases in inventory rates. We're still low inventory on the increase, but still not enough to get the needle to move in favor of the buyers significantly. And there's still a lot of money in the area in spite of a large number of job layoffs and company relocations out to the other parts of the country. Not in the numbers that we need in order to make any difference in the sales numbers. Still going to be a seller's market next year. Worst case, it's going to be balanced. A lot of this is economy dependent. A month ago, before the election, before the headlines changed over to something else, they were talking about being in a recession. I've mentioned a little earlier that the election is kind of distorting reality, in that the jobs numbers that we had come out spiked the interest rates and created a bunch of chaos in the market on the expectation that the Fed was going to reduce the rates twice before the end of the year. Because we are in an election cycle and the powers that be tend to try to keep the status quo, I believe that number, the jobs number, distorts the reality. I expect that to come back to reality after the election, when that information will not affect the election one way or another. And possibly if it goes the way of Trump, then we may actually end up seeing a lot more bad news out there, because that's generally what happened 4 or 5 years ago. We'll just have to wait and see. But right now we're dealing in a pre-election information setup, which means that we're not getting anything that useful to make decisions on. Expect good information in these reports in December. This year I am planning on running through the new year with these things on a weekly basis, and when it comes to making forecasts, we are looking at, we're just not looking at a lot of good information that we can make any good predictions based on. Our predictions are 6 months out. That's the farthest we can actually predict anything, which is enough time to get a seller or a buyer financed up and give them some good guidance on where the market is and how to adjust their pricing, their offer pricing, or if it's the sellers, where they come on with regards to where the listings are. Very short cycle in these days because of the internet, and like I say, December is going to be the big month where we're going to see actionable information. So let's talk about the Concord market. Condominium market in Concord. We are looking at a fairly balanced market in the condos arena. All the hits to the financial end of real estate transactions are beginning to settle out at the bottom end of the market in Concord. This has been going on all year, ever since the interest rates spiked earlier this year, as well as increased insurance costs that I've been mentioning in the last few videos. And the condo market's getting hit the worst if these associations have fires where a claim is made on that the association has to pay for. Have one coming on the market early part of next year that it was impacted by a fire. Their fire insurance has gone up from $1 to $3 million. An agent around my office has another listing that has an association that had a condo fire in it. Their insurance went up at least 2.5 times what it was before the fire. This is a real problem. I imagine the condo associations are just beginning to get news of this as these fires begin to really hit these condo associations hard, in order for them to meet their CC&R obligations. This is a big factor financially on the bottom end, because as association dues go up, the average association dues in this area is about $500 a month. We're going to probably see those more like $700 a month as these insurance and increased costs get filtered into the transactions over the next couple of years. And this, of course, is going to affect the total math of buying a condo, and with a lot of downward financial pressure until everything shakes out. Again, we're still dealing in a low inventory situation, even though the Concord condo market is probably the leader in inventory in the region. We haven't seen huge movement. They've probably lost about 25% of value just on the interest rates and other economic factors currently, with another couple $100 worth of insurance, another couple $100 worth of homeowners dues. There's going to be another $10,000 or $20,000 coming out of the market on that end, and but I think we're beginning to kind of hit the bottom of that. It's really kind of hard to see a 50% reduction in prices without any sort of economic shock to force that, like a COVID pandemic, or a major bank failure like we had in the Great Recession, with prices down about 15 to 20%. That's significant savings for buyers, and consequently it opens up first-time home buyers that are at the bottom end of the financial curve to start getting their feet wet into the condo market. It's something that looks like a civil price. I know $250,000, $300,000 for a condo is a single-family house in most parts of the country, but this is the nature of the Central Contra Costa market. The numbers look worse than they actually are. I'm going to put them up here as we go through them. But what's happening is it's the top end of the condo market that's getting kind of dragging the numbers down, because at the very bottom end of the market and throughout the center, we're seeing market compression where small moves in price will buy you vastly different quality of product. The bottom end of the market exclusively is 1 bedrooms at this point, with the mid-market making up mostly 2 bedrooms, and the difference between the two price segments in the middle is only $40,000. That's 15% of market, 15% of market price. So as the higher end of the market and the larger condos begin to fall down in price, the mid-market's being squeezed. And again, this creates an opportunity for buyers to take advantage, because once the top end of the market shakes up and stabilizes, starts going the other direction, you're going to see a disproportionate bounce in the middle of the market that's going to obviously put money in a buyer's pocket, and of course seller's pocket, as they begin to get better pricing. Top end of the market is actually down. It's down to $488,000 this month. Part of this is on low inventory, but there's been enough units in order to show us that we actually have a upper end of the market. This top end of the market has been dropping down on the low inventory units, been pushing the numbers of the rest of the market in a downward direction. But if you strip out the low inventory and the high price point and the adjustment that they're making, the condo market is in a very healthy place right now. Supply and demand seem to be balanced. Condos are being priced right for what they are. Sellers aren't extracting ridiculous prices, and notwithstanding the risks that are in the condo market with fire insurance and HOA dues and increasing costs with fluctuating interest rates, condo market is looking pretty darn good at the very bottom end of the market. Bottom end of the market is a flat $300,000, good clean $15,000-$20,000 below the midpoint of the segment. It's all 1 bedrooms. 42 days on the market is normal, very healthy, and overall very healthy. Inventory is on the increase, but the chart, if you look at stock market charts, when the top end of the market starts to go like that, it usually means that you're at a top. That could possibly mean that we've seen the big rush of inventory come on, so we can look at 2025 as being fairly stable. If you believe in that sort of thing, obviously we can't predict things going forward, but numbers are numbers. And the number does appear, and like I say, it does appear to be looking like it's topping out. The condo market is still adjusting to market conditions, so there's going to be some more fluctuation in these numbers, especially going into what I said about the third quarter being down a little bit. This is a normal seasonal adjustment. It comes around every year. It will rebound in 2025 in the second quarter, and so second quarter 2025 in the Concord condo market is going to be very telling of what the market's going to look like in general, and I do expect to see some stabilization in the market. Kind of from where it looks like right now, we're looking at a stable market because of where the 2024 price declines have landed the condo market, and consequently pretty good market for sellers if you have equity in the property and you're looking to get out. Good opportunity to make that move into either the upper segment where prices are really depressed, or moving over into the entry level of the single family market if you can potentially afford it. Concord single family home market looking very, very stable right now. Healthy from top to bottom. Again, we're seeing high-end price pressure on increased interest rates and insurance pressures, but in general, the rest of the market is looking fairly stable and fairly healthy. It's all looking really good over in single family home Concord market for both buyers and sellers. Prices are still very good. Inventory is still very low. But there's not enough buyers in the market that it's driving buyers crazy, with crazy ass multiple offers in order to acquire a property. The prices are stable. The price per square foot has been stable. Inventory is now stable. Median days on the market stable. So this is a sign of a healthy market, supply and demand imbalance, and the seasonal trend will of course impact this with whatever we end up seeing a month from now in terms of economic realities. Probably going to be some inventory as the sellers adjust their pricing to where they need to be in order to sell, and the buyers leave the market to go on their vacations. Don't expect to see radical changes in the market with a huge increase in inventory and huge decrease in buyers in order to push those market segments into different territory. And it's still looking like a strong seller's market for the most part, tipping into the balanced part probably on a house by house location, neighborhood by neighborhood location. And so if you're looking for a house in the Bay Area, Concord is a great opportunity to buy. It's a fantastic area, lots of choices, lots of price point, entry-level price point, starting around $500,000 for the fixers, $700,000 for the right price midpoint homes. I'm still seeing a lot of seller optimistic pricing in neighborhoods that probably shouldn't support it. Houses that are currently right now at the $750,000 mark probably should be at the $695,000 mark. You know, can't blame them for trying. Maybe there's a buyer out there that'll give it to you, but the reality is that you know, 25 to 30% of the market still has to correct in order to get the fluff out of the market. And when you strip it down to its essentials, the prices are looking good where they're going into contract. So, looks like that's all I had for today. My name is Bob Georgiou with Remax Accord. Central Contra Costa Real Estate agent for 25 years now. We're coming up to my anniversary, and 99 to 24 years, I think, what it's going to be this year. But 99 to 24, yeah, 24 years right now. So, 24 years in the business. Happy anniversary to me. Appreciate you taking the time out, checking out these videos. If you have any questions about your house or buying or selling a transaction in Central Contra Costa County, I'm happy to help. Feel free to call or email me anytime. In the meantime, we will see you in escrow, and have a great week. Talk to you next week.